Hello and welcome to this Forex Preview at xm.com. I'm Maria Bachardez, and joining me is investment analyst Christina Bartholomew. We'll be discussing the Bank of Canada's upcoming policy meeting on Wednesday and the outlook for the loonie. So Christina, the Bank of Canada will hold its last meeting of the year, and markets are certain that the bank will not take any action. However, looking at COVID infections, Canada hit a new record high this week, and the government reimposed new measures in some areas. Do you think the bank will follow market expectations?
Hi, Maria. Indeed, the virus spread is getting worse in Canada and restrictions will remain longer. And this is not surprising during the winter months, but economic prospects have changed now because of the optimistic vaccine news. And some countries, such as the UK, are scheduled to start vaccinations this month. And more countries will likely follow soon once they arrange some distribution problems. So currently, there's more transparency about when the virus crisis might end, and that gives some relief to the government and the central bank because debt levels have already surged the highest levels in many decades. Of course, we might see more bad days during the next few months because it might take some time before a large part of population gets vaccinated. So businesses and consumers will need more financial support during the winter months. But in the case of Canada, the government has decided to take action first and remove some pressure from the bank's shoulders. Last week, the finance minister promised to add $25 billion to the existing programs to help the economy during the winter months, up to $100 billion more in the next few years to boost recovery. So the central bank will wisely wait and see how things will develop, keeping interest rates at a record low of 0.25% and asset purchases unchanged. I don't think a rate cut would benefit the economy. The bank is currently having higher interest rates than the US and Europe, so that might bring a larger wave of foreign investments when businesses start to operate at normal capacities. Moreover, households' saving rate has declined a bit, but is still at very high levels. The outlook for crude oil demand next year has improved, which Canada exports the most. And Biden is expected to be more generous in terms of trade to Canada in the coming years. Moreover, the employment data last week also came in stronger than expected. So it seems that Canada could have a bumpy recovery because of the virus restrictions, but relatively could be at a more advantageous position next year.
Okay, turning to FX markets now, the loonie has strengthened its upward trajectory against the US dollar. Do you think the Bank of Canada meeting could further stretch this rally?
Well, that may depend on how optimistic will the rate statement be. The bank will not update its economic forecast this month, and markets have excluded the case of a rate cut. So we will take a close look at any statements that express a more brighter outlook for the economy. Moreover, on Thursday, the bank's deputy governor will give a speech about Canada's economic conditions. So perhaps his remarks may attract a bigger attention than the rate statement itself. Moreover, the U.S. is also rushing to get the stimulus bill done before the year end and avoid the shutdown, and Democrats seem to have agreed to negotiate a smaller bill, which makes things easier for Republicans. So if we have more progress on that front, the U.S. dollar may give more ground to the loonie because of fears the U.S. deficit will further expand, and because the dollar is a safe haven and tends to react negatively when there is less uncertainty in the markets. Now, from a technical perspective, dollar loonie seems to be oversold, but the pair has breached its sideways trading and strengthened its downtrend to fresh lows. So the market needs now a steeper rally or a bigger negative surprise for the loonie to reach the 1.2980 level and get back into its previous range.
Christina, thanks so much. And thanks for joining us at xm.com.